Last week I mentioned that euro was attempting to collapse. You notice how we touched this red support resistance line right there on the 30th of March and on 31st of March, but we failed to break through. So euro actually did not, technically speaking, enter a downtrend yet. And in fact, today we saw a breakout by euro. So euro is now back into an uptrend, and I would be buying it right this instant. The dollar index, currency index, is about 50% euro. So it makes sense that right now dollar index is under pressure. Notice that here's the 30th of March. And then we basically dropped, and actually there was a gap here between 7th and 8th of March, and we kind of moved lower. So this gap still needs to be filled, and if it does get filled, then gold will come under pressure. Why? So dollar moving up, meaning dollar is becoming bigger. So let's look at gold. XAU divided by USD. If this bottom part of this equation will become bigger in the near term, it will pull this currency pair lower. So still not a very decisive chart for gold. Technically speaking, we're seeing buy signals where these up arrows are, but I am very reluctant to trade gold on the upside until dollar is back in the bear market. So dollar needs to drop below this red support resistance line, which is not that far away. It's like less than 1%. So even if euro strengthens a little bit next week, I think dollar could easily drop into a new bear market. So if that happens, I think I would be much more comfortable trading gold on the upside. Same goes for GDX, gold miners. So again, this is technically speaking a buy signal that occurred on 31st of March. And so if you have my indicators, you could have gotten in and traded it. And let's wrap up with oil. So oil is obviously extremely volatile. If you got in back in March, on March 2nd here, you probably made some good money. I would consider getting out at this point, honestly. Just based on this action, it's not a great looking action if you're a bull. So first of all, this just giant red candle